Jill, welcome back into the back room.
Did I not make a splash last time and you did not expect it, mister? You
You
said to
did
me,
make a splash.
you
You have
said to
become
me,
one of our.
yes. You were like, by the
I
way, of
told
course, it's
you.
just no, this is like a typical, like, I'm your friend. And your reaction was like, you're not going to believe it, but people liked you on the show. And this is
I
also,
did not frame it
um,
that way.
Andy, also, are we going to
I
tell
said this may
people?
come as a shock to you, but you're
No, I came a shock to you. Do we want to tell people about our idea about how I'm going to become a permaguest for you? What the name of the show should be? What's
go
your
for it.
tagline now? What are the
With
P's? Like you're doing politics
pop culture.
and I said politics, pop culture, profits. And I wanted to add profits as a way for me to worm my way into your world as a permaguest, right?
You had hit on something which is genius. Is not surprising, which will make you even more wildly popular on this podcast. And we have to do that. We really should do that. We're kind of doing it now. We're going to do it
Exactly.
right now.
Let's do it.
So, ladies and gentlemen, welcome to the back room, where you get to hear about politics, pop culture, and profits.
Yes.
So, without
Yeah.
further ado, Jill,
Yes,
it is
sir.
very timely you are here today because there's so much happening right now with the economy and the financial world. But today, for the first time in a while, a really long while, we're seeing kind of a meltdown in the market. Now,
Oh,
by meltdown,
yes.
to
Tell me
me,
what.
these
Tell the
days,
people
a
what you
meltdown,
mean.
to me these days, with the way this irrational exuberance has been happening, the way we've
Yes.
we've been witnessing, a meltdown would be anything that's red.
Yeah. Well,
We've seen no red.
there's a little red on the tape today. So as
Today there is, but like in the last, I mean,
I
we have
know.
a shutdown. How weird is it that we have a shutdown and the market's like, shutdown,
Well,
shutdown.
don't you think that has a lot to do with just people like been here, done this, and who knows how this is going to last
But have,
and how long it's
but
going to last and what's going to happen. But as we speak today, Friday, October 10th, 1:20 p.m., you are right that the S&P 500 is down just under 2% and the Nasdaq's down 2.5%.
okay,
However, you're also right. Like, oh my God, what a year. I mean, if you think about it, we were down from the tip top, like in February, down to the April 8th low. I think it was a 19% drop. And now for the year, we're up to more than 12%. That's incredible. It's
well,
incredible.
it's incredible, and maybe I'm just looking at it the wrong way, but we still have massive tariff and trade war uncertainty.
Hmm.
We have consumer confidence numbers came out today that were like 54, which
Yeah.
is, I
But it
mean,
hasn't translated into anything. It's weird.
we have troops on U.S. streets. We have people being disappeared. We have poor Venezuelans being blown up in the water. God knows who they are. They're probably not.
You have Russ Vogt basically laying people off and now saying, I'm going to fire a bunch of people. That's
We have
bad.
the layoffs, the furloughs. We have all this chaos. We have indictments of political opponents, and yet every time you put on CNBC, it's like green, green,
I
green, green,
know.
green, green.
I know.
How unusual is that to you? Am I
Uh,
looking at it the wrong way?
no, I mean, because we're
Shouldn't
old.
the market be crashing like every
We
day for the
are
last?
so old we bring that experience in
Get off my
because
lawn, will you please?
I am so grouchy. Slow down. Everybody slow down. Um, I think one of the issues that I always confront is like, it really feels like the world is operating in two different speeds, right?
Mm.
I hear from people all the time. Like last week, I went on the air on CBS and we were talking about the furlough, and people literally were like, "Oh my God, I'm furloughed. Should I pay my credit card bill or not? Should I pay? What about my student loan? Like, real, like, oh my God, on the ground, I'm freaked out, right?
Hmm.
And markets are making new highs. And so I do think it does feel like a tale of just two different financial realities. And when you look at your personal finances, I think it really breaks down based on, do you own a house and do you own stocks or
Hmm.
not? Because even if you're making a lot of money, if you don't own some assets, it doesn't matter. Like, you're just feeling unnerved by everything. And I think that if you're lucky enough that you bought a house before interest rates went up and the housing market exploded higher, if you've been lucky enough just to be consistently putting money in your 401k, you feel a little bit better, but everyone else feels like crap. And, I cannot underscore how important it is that when you feel uncertain, your brain does some weird stuff. And this is the uncertainty that we see in a lot of the survey data. But the really curious thing is when you see confidence levels that have been this low for this long, you usually then see an action like, oh, I'm not going to spend anymore. And that is what has been missing. We have not seen behavior shift, even though we all feel crappy. Not all, but a lot of people
Is
feel
that
crappy.
now, is that coming? It is only 10 days into this. Are we going to start feeling the negative impact of this? Is the economy going to really start to show the negative impact? Are we starting to see it today, finally, in the stock market where everything's catching up and going, wait a second, shutdowns aren't good?
Yeah, I mean, I think that I would just kind of disassociate stock market from economy for a second and just
Hmm.
talk a little bit more about the economy first. Okay. So
Hmm.
let's talk about we come into this year. It should be a good year if nothing happens. Then the tariffs occur and then we wind them back. And then we sort of land in this strange place with tariffs where they are in place, right? And they are going to increase prices. And there is significant risk that in the last quarter of this year, which we are now in, that we are going to see the consumer price index, the measures of inflation are going to start inching higher. They're not going to go up like they were during the post-COVID opening. Okay. It's not going to be 9%, but could it be 3.5%? Absolutely. Fed wants 2. It's going to be higher. Now, that would normally suggest that the economy would really slow down. And we are seeing evidence that the economy is slowing down, except for one big thing, and that is the amount of money being spent on AI, and that investment has really powered a lot of what's going on in the economy. So we're showing growth in the economy. Growth will slow down, prices will go up, growth will slow down, but there is not a sign right this minute of even a yellow flashing light of recession. There isn't right now. It
Hmm.
doesn't mean there won't be. I'm just saying right now. And so I think that if this shutdown persists, now we're, not 10 days, not 20 days, not 30 days, but if we're talking about this in 45, 50, 60 days, I mean, this could really have a meaningful impact. And the extra part of this that I think most participants who've watched past shutdowns have never experienced is the absolute, um, almost like this disdain for these federal workers that we are seeing from the administration and their ability to just sort of say, we'll let them go, as if
Hmm.
like they're not in the. But all of those people spend money. All of those people who will be laid off, the ones that were doged, the ones who are getting furloughed, the ones who are small businesses that serve those people, the sandwich shop across the street from the Department of Labor, the dry cleaner across the street from someplace in the middle of the country where there's a government office, those small businesses will feel the impact. And also, so will all those contractors who serve the government, who are not employed by the government. And guess who's not getting paid back those that lost income? So that will have an effect. And so this is solely dependent on how long it lasts. And also, by the way, how many more people really lose their jobs, not just furloughed, not laid off, not made whole at the end of this. If all of a sudden we see wholesale hundreds of thousands of people losing their jobs, that's going to be bad for the economy. So far, Andy, we've only had, I shouldn't say only, I think that because of Doge and retirements, about 100,000 federal workers. The economy can absorb that. What the
Hmm.
economy's not going to be able to do is absorb 500,000 people losing their jobs. That's not happening. Like that's going to be very bad for the economy.
So what I'm hearing then is that if, let's say, this shutdown ends end of next week or sometime before that, or maybe into the early part of the following week, we're still at a point where there isn't lasting damage that's been done. So
Yeah.
it's fairly reversible.
Yeah.
So there's a point where it really is going to become a real problem,
Yeah, I think so.
and
I
we're
mean,
just not there yet.
yeah, I mean, for every week that we are closed, we'll lose about a tenth of a percentage point of growth. So,
Mm.
if you think about it, let's say that we were on track to grow for this full year 2 or 2.25%. Let's just pretend that that's the economy's going
Hmm.
to get bigger by measure of all the goods and services sold. That's GDP, and it gets 2.5% bigger. even with tariffs, even with all this. Now the government shut down for 2 or 3 weeks. And now maybe growth ends up by the end of the year. We're at 2, just under 2. Okay. That's not a recession. We're still growing. We're growing more slowly. And if things can get back on track, if we don't have any big financial accidents, if nothing crazy happens, which of course crazy things happen all the time, then we resume our growth trajectory. But, I still think the tariff story has not yet really been written. We just
Mhm.
don't know where we're going to land on a lot of this. And so, yes, we know with some of our trading partners, we're 10 or 15%. We still have an issue with China. I think that, it's funny as we talk today, because, I'm a plain old commodities gal, my first job on Wall
Mhm.
Street working on the commodities exchange. I note today that the price of crude oil is under $60. I know you think that's a good thing, everybody. I know you're listening. You're like, why is she bad? Is that a bad thing? When oil goes down, it usually means something's not great in the economy overall. Just know that. Just know that, like, when there's not a demand for oil, that means that there are things in this economy that aren't going so well. And we haven't necessarily seen it in all the data. And by the way, we're flying blind without a lot of data right now.
Mhm.
But
Right.
when crude under 60, I mean, I don't think it's going to 40, but I think it tells you that we're slowing down. And so
Mm.
that slowdown, how much we slow down, what happens next, who knows? And any of these dopes who say, well, I know what's going to happen. They don't know what's going to happen. Stop watching CNBC. They don't know what's happening.
And with regard to the tariffs, are you saying that this story isn't really been told yet, in part because there are a lot of companies, corporations that have been eating the tariffs? We saw that earlier in the year with
Yeah.
Walmart,
I had a
and
great,
that they haven't passed these increases yet
yeah.
on to the consumer.
I have a good friend who does a lot of business with Walmart, and she was telling me this really fascinating story about like how the negotiations have been going with Walmart. Walmart's such a dominant player, so it's a great example where Walmart's basically able to hedge a lot of the problems with tariffs by working with the people who are supplying them stuff, sharing some of the burden. And she was saying how she really believes that as we get towards the end of the year, you're going to see the prices get passed on a lot more. You're just going to, there's not going to be any more room.
Hmm.
Because if you're Walmart, don't think Walmart's evil, because I'm not suggesting that. I'm
No,
just
no,
saying that they're going to eat it because they want to make sure that everyone continues to work to shop at Walmart, right? And at some point, they're not going to eat it anymore because it's going to eat into their profits too much. And then they are going to pass along some of that to the consumer. Will the consumer pay for that? Or will the consumer look through that and say, I'll pay for some, but not all, or change
hmm
their habits? We don't know because it just hasn't really hit the consumer in a big way. We know that consumers feel pressure about so many things, Andy, like the just it's not just the cost of groceries, it's the cost of childcare, and it's the cost of
hmm
housing, and it's the cost of healthcare.
Healthcare,
Right.
everything. Yeah.
It's like you really need to have a lot of money to not really feel those burdens. And I know if you're watching this and you're like, I feel it. Of course you feel it, but you don't feel it to your bones where you can't sleep at night. And we have a lot of people in America who feel it to their bones and can't sleep at night.
So the shutdown, we just mentioned healthcare. The shutdown, at least according to Democrats, is about healthcare. It's about reversing the huge cuts to Medicare, unprecedented cuts to Medicare in the big ugly bill. It's about getting an extension on the Obamacare subsidies. Republicans, of course, claim that it's all about not allowing undocumented immigrants to feed off the Medicare system at taxpayer expense. So tell us what's really happening. Okay, is that just bullshit? What the Republicans say?
I think it's largely nonsense. I think it's so weird to me that you have this unloved program called the Affordable Care Act that 24 million people are using. I mean, that's
Right.
astounding. It really is.
Mhm.
And it reminds me, I don't remember what election cycle we were in, Andy. Was this like I think it was probably a town hall where someone says, I want government off my Social Security or my Medicare or something. And you're like, okay, those are government programs. Maybe you don't
Mhm.
realize it. And
Right.
I think it's shocking that we have a program that's actually doing very well. It's not even a perfect program. Like, I'm sure that there are
Mhm.
plenty of progressive people who think it stinks, but it's better than where we were with a lot of people uninsured. So what
Mm-hmm.
happens when you have changes to plans like this and the premiums rise, what will usually occur, like human behavior is, the people who are healthy are like, I don't need this. Screw it. I'll go without coverage or I'll get some catastrophic coverage and I'm healthy. I'm fine. And then the people who actually think they will be needing these services stay in. And that means that the people who usually keep those premiums down, the healthy ones, they're out of the pool. And so things will just keep going up price wise. So this is a big problem. And I think the problem is also that it becomes this I think these subsidies that tax credits essentially that people are getting
Mm-hmm.
have been awesome. Like I hear from people who are 58 years old and they get downsized at some, what's the matter you kind of institution, and they lose their jobs and there's 7 years till Medicare. And thank God for the Affordable Care Act. Where else would they go? What would they
Mm-hmm.
do? And they might go without coverage, which seems astounding. If you're 55 years old, you would never do that. It's too scary. But these are not insignificant costs. And if you don't have income to pay for, you should get premium. You're getting tax credits. So I think the idea, it's not a perfect system. I'm not suggesting it's perfect. I'm just thinking if
Mm-hmm.
you're going to try to reform this system, wouldn't it be nice to kind of everybody sit down and be like, well, what are we missing here? What are we doing? Are the incentives right? Are we, many states after COVID expanded who could qualify for Medicaid. That's health
Mm-hmm.
insurance for people who make less than a certain amount of money. And they expanded that. And then a lot of them said, okay, that's over. When that was over, many people went and said, okay, I'm going to go to the exchange. I'm going to go get the Affordable Care Act. And the rules were such that, if you made less than a certain amount of money, you get a tax credit. But other people said, well, if you work a certain number of hours at a company, you had to get the company coverage. For a lot of people, the difference between working less and qualifying for a tax credit, could be sometimes 5 hours a week, versus paying $900 a month for coverage through their work, was like, that's the most obvious choice in the world. Everyone is a rational actor here. Work 5 hours a week less at this job, qualify for the Affordable Care Act, get the tax credit, the subsidy, and go figure out how to make more money doing another job. But if you have
Right.
to, if those are your choices, so that's a problem with the system, that if we're incenting people not to work, that's probably a bad problem that we should try to fix. But this is not the fix. This is just actually making it worse.
And there's also a lot of disagreement over the timing of these subsidies. They expire at the end of December, yet Democrats are claiming that the insurance companies are doing their planning now, and you have the enrollment period, which I think is now. And so it's
November
like
1st.
the decisions that go into this process for the consumer, they need to know now. They can't wait for hopefully the Republicans and Democrats to negotiate this thing to resolution at the end of the year. So it's a political argument being made, but does it really need to be resolved now? Because that's what it sounds like,
I don't
and
think
not wait till the end of the year.
I mean, I think that first of all, there could be an emergency. I would imagine you could say, well, you know what we're going to do? We're going to keep the window of the enrollment open longer until this
Mhm.
thing is resolved. Wouldn't that be easy? Can we
Sure.
just agree to that? And that's not so hard. Just keep it open longer. But
I'm sorry. Did you say agree? We were
no,
asking for a lot
these are
here.
all false deadlines in many respects, right? Aren't they?
Hmm.
And it's also a little bit of a false flag. It's okay. Well, we're going to change all the, like, there were no big problems that the bill addressed. There are other problems in healthcare that the bill does not address. Okay, so I'm not saying there are no problems. It's just that they fixed the wrong problem. There was no problem that needed to be fixed with, oh, there's all these people, these latchers on who somehow are all in the Affordable Care Act. That really wasn't the
Hmm.
problem. The
Dead
problem was,
people.
yeah, one of them. But the problem was that there was, like, what we call in healthcare coverage, donut holes. There was
Right.
coverage, then there was a hole, and there were people who fell through our systems that exist because we have such a complex system.
A lot of the stuff that we're seeing seems baked in. So, for example, we have Fed cuts. Are they coming? Are they not coming? How many are coming? Does
Mm.
it matter if they don't cut? how does that affect, let's say, the stock market? If they do cut, and they don't cut enough, how does that affect the stock market? And if the stock market reacts negatively, how does that affect the economy and consumer confidence? If you look at your 401k and or your stock account, and you've got 5% less or whatever, are you going to go to the movies as much? Or are you going to spend money on restaurant? Like, is that a big cloud hanging over the economy and the stock market right now?
Well, it's a funny thing. We've given so much attention to the Fed, and the Fed has been politicized, and the
Oh, how so, Jill? I have no idea what you're talking
finger
about.
pointing and terrible people who are doing this, and people whose names are hard for people like me to pronounce. Myron. Don't spell your name Miran and pronounce it Myron. Don't do that to us.
Did you say Mirren?
I thought it was Moran, which is what I would have thought, but then I realized very quickly that someone said, no, it's Myron. Anyway, so, he wants to cut. We just had Fed minutes out this week. Here's a question, Andy, that they are asking themselves. What's the bigger problem right now? Is a labor market sort of at stall speed? Is that a bigger problem than a re-acceleration of inflation? That's the question. That's what they're going to wrestle with. Now, it's very funny to think that a lot of the immigration policies of this administration have actually argue against lowering interest rates, which is what they want. Why? Because the way we look at the labor market is we have two different surveys. One is a survey that we say, hey, Andy, you own a company. Did you hire anyone or did you lay anyone off? That's one part. That's called the one survey. Then we go to households and we say, hey, Andy, who in your house is working and who's actively looking for work? Now, because of immigration policies, the number of people looking for work has been diminished. And so if we don't have as many people looking for work, that's why our unemployment rate hasn't gone up a lot. Even though we're only, say, creating 30 or 40 or 50,000 jobs a month, the unemployment rate hasn't gone up because if you're not actively looking for work, you kind of don't count in the figure of unemployment, right? And so the immigration policy has actually kind of helped, in a weird way, make the unemployment rate look okay. In which case, if you're a Fed governor, you're like, well, then why should I worry about the labor market? Even if the labor market's slowing down and stuck, we're not seeing mass layoffs. We're just not, except maybe in media soon. And by the way, let's see if I have a job in a few weeks. But in certain industries, well, you never know. No, everyone's replaceable, Andrew. But if you think about it, if you're the Fed governor, what should you worry about? Now, there's a case to be made for the Fed to basically lower rates for, like, say, 2 more quarter points by the end of the year. But if we see that inflation starts ticking up and all of a sudden that makes us as consumers freaky and we change our behavior and we're all of a sudden nervous again, and then the inflation rate keeps rising, then the Fed is going to just stay still. And so I don't know what they're going to do. I really don't. I think that it's going to be, first of all, they're flying blind right now. So next week, we're supposed to do all the collection of the labor market for the next report. That's called the reference week. And next week, if they're still closed, there's no jobs report for the second month in a row.
Right.
So,
and how does that impact investors' ability to gauge, and small business owners' ability to gauge where they should be putting money, how they should be hiring or not?
well, I think that what it does is it makes us rely on different data points, and those it may not
Like
be ADP, but it's not perfect. Or you go through the Institute of Supply Management, and they have a manufacturing survey and a service survey. And sometimes that matches up long term, sometimes it doesn't. But how are we going to get our arms around whether there are government jobs lost if the government's not going to report them? So I don't know. And there is some question as to whether the Fed meeting on October 28th and 29th will even take place if they don't have enough data. Maybe they'll meet and they'll say, what are you wearing for Halloween, Steve? And he'll say, well, the Grim Reaper costume's already taken. So now I have to find something else.
What's interesting, you say something in half jest, but with regard to the shutdown, are Fed employees paid during, or are
So
they?
the Fed's open. They are
It's
self-funded.
open.
They're funded differently. It's sort of like Social
Interesting.
Security, Medicare, Medicaid, VA, hospital. They're open because they're funded through different vehicles and different different congressional
Complicated.
acts. The Fed is
Mm-hmm.
definitely open, but they may say we're not going to release. They might meet and say we're doing nothing until we have more data. They could totally. That's a very conservative approach, which they could do. They might meet and say like we're convinced through alternative measures of employment that there's a weakening, and therefore, because the Wall Street Journal keeps every week talking about how young men who've graduated college can't find jobs, that we're going to lower rates again by a quarter percentage point. They may, I
Mm-hmm.
mean, I don't know if that's going to be the case or not, but they are open. It's like the IRS is open, but they don't have as many service people. So if you owe the IRS money, don't forget to make your payment by October 15th. But if you dare call or even go to the website, you may not get what you need.
Mm-hmm. And they just laid off, aren't they? Laying off a bunch of people. That was
Yeah.
announced this week.
Yeah. I mean, it's this funny thing. I like the people at the IRS. This is very, so don't audit me ever. No, I mean, I think they do a
They're
really,
fabulous, by the
they're
way.
so great. Um,
Some of the best people in government.
Maybe the best.
Nice, smart, dedicated, patriotic.
Yes, the best civil
Mm.
servants we have. It's a hard job. And we are so cranky, when we're like, oh, the IRS. It's like everybody who says, like, oh, my lawyer is great, but lawyers are horrible. It's
Yeah.
like,
It's like you don't want to work at the IRS. You don't want to work at the DMV.
yeah, I
That's
mean,
my
but they're really,
motto.
those folks are really hardworking. They do great work.
Mm-hmm.
Same with the people at the Bureau of Labor Statistics. It's like we see the president fire the previous head of the BLS. And
Mm-hmm.
why? Because when we just to like
The numbers weren't good.
yeah, the numbers weren't good, but the real problem is that before COVID, like even if you go back 10 years ago, when I told you that we had the survey, like, hey Andy, you're an employer, did you hire anyone or did you let anyone go? It used
Mhm.
to be that we'd get like a response rate of about 80 to 85% the first time we nudged you. And now that's down to like 30, 35%.
Mm.
Because you're a business owner, you're very busy. Like, what am I I got to talk to you and tell you what's going on. I got things to do. And now what we're blaming the labor department for is the fact that we're not getting a response rate that is as accurate. That's why we had those revisions. We always have revisions for 2 months, but these big revisions are about
Mhm.
making sure that the federal data starts to match up with state unemployment insurance claims. And so we get better reads of what's happening. This always happens. Is it every year this occurs? But the fascinating thing to me is that, okay, if you don't like the method, so you're going to like let people go at the organization, or you're going to say, wait, you guys know this is not necessarily working the way it used to work. How can we make it better? And you let all the people go who have the institutional knowledge and probably have good ideas about where they could improve it or how they can improve it. And instead of keeping them, you're like, they're all stinkers. I don't like that.
Yeah. Well, and now Trump wants to do away with monthly reporting. Like how that just seems like
It's insane.
not a good thing.
It's not a good thing. But you know what will happen is that companies will swoop in, I think. Even like when it's funny, like when he said, when it was like, oh, I don't think publicly traded companies shouldn't report quarterly. Really? I
Right.
mean, if you're a investor in that company, you're like, oh yeah, I like that quarterly reporting. Thank you very much. And
Mhm.
maybe we're going to start paying a lot more attention to what's going on in the economy from that kind of reporting as well, right? Because a lot of the analysts are saying, well, we used to like joke, like, how do you know what's going on in China when you have state-sponsored capitalism, right? Who knows what the numbers are? But then there were very
Right.
interesting ways to kind of drill down and figure out what was happening. Well, we're moving more towards China, and they're moving a little bit more towards us. So we're going to be finding different ways to look at the economy and see what is really going on under the hood. And guess what? The reality is your experience on the ground is going to matter. So if in 3 months we don't have an inflation report, but it costs you $20 more every time you go to the grocery store, guess what? You're going to be like, inflation must be going up. That's going to
Mhm.
be it. That's going to be the real tell.
So we just finished Q3.
Yeah.
Give me the good, the bad, and the ugly of the first 9 months of this year. Let's start with the good. I know we touched a little bit on it before, but
Yeah, I mean, this AI spending is incredible. I mean, it's
Mhm.
just beyond, like, it really is incredible. And, I know that anyone who watches this stuff says, oh my God, it's like we're in a bubble. It's irrational exuberance. Remember the year that, I just happen to remember this, the year that Alan Greenspan called the internet bubble, or said the internet investing, the what was going on was irrational exuberance. You
Hmm.
probably don't remember this, was 1996. So there was 96, 97, 98, and 99, 4 more years of irrational exuberance. And so what I can say is, it's not the same level of irrational exuberance because we have companies that are making money. Yeah, there's a lot of folks pouring tons and tons of money into AI, and some of that's going to be money down the drain. There's no doubt. But these big tech companies, the ones that you love, Andy, that you always have like pointed out, probably before a lot of people, like you really did kind of get it, that those companies, even when they make a mistake, Mark Zuckerberg says, oh, I'm going to do the glasses. Oh, I'm going to do this. But now it's like, uh-oh, AI. Yeah. And he's making it work and
Hmm.
he's adjusted and there's a lot of money being spent. And that is astounding that the first 9 months of this year, really all of last year and the first 9 months of this year have been incredible. Just the amount of money going in. So that the good is that, hey, innovation works. I don't know how this is all going to work out. It's not going to be, it's like, it's not, I wonder if it's going to be more like, is it going to be like Ozempic? Like all the hype is real? Like, oh my God, it's incredible. Or is it going to be a little bit like, it solves a lot of problems. We're not quite there yet. We'll have to have some sort of pullback to reassess and see what it is. And yeah, and it's awesome. And so that's pretty good. I like Americans coming forward and like making cool stuff. That's awesome. So that's the good. The other good,
So
yeah, go on.
I'm sorry, I was just going to comment about AI because we've seen, a bit of a pullback in the last week and a half, but Meta was getting near $800 a share. We see Nvidia is about to crack 200. AMD this week, right?
Yep.
40%. Like some might argue that seems like irrational exuberance, but is that just short-sightedness? Are we at the beginning stages of something truly transformative
Yeah.
that has lasting power for a very, very, that's going to just change everything? And if that's the case, you look at what was it, Jensen Hang, the NVIDIA
Jensen Wang.
CEO, Wang,
Yeah.
like he said yesterday, the demand is going through the roof, and it's like
Yeah. But that, I mean, so yes, the demand is going through the roof, but of course, the demand for a lot of things is going through the roof. Doesn't mean it's worth it. And we'll see. So, the good news about me is I never have to predict anything. Such a weenie, because it's not worth it. There's something real. It's something cool. We'll see the application. We'll see how it goes. There's going to be a lot of people who lose a bunch of money in this. Yeah. Okay. I get that. That to me, but that's
lose
any.
money by having bought, or lose money by not getting in.
Well, I think there's going to be a lot of companies that spend money that they look back and are like, oh, that wasn't the smartest thing in the world, And there's probably going to be investors who are like, I shouldn't have put all my chips in this one thing. Like,
Hmm.
diversification does work for a reason. So
Hmm.
money will be lost, money will be wasted. And I think we'll get like any new technology really that transforms an economy or transforms the world takes some time. We'll figure it out. And, there's something cool here. Let's be honest. Like, I am not like one of these, I'm not a fatalist. So I'm like, oh, the world's coming to an end because of AI. But, I think that we'll figure it out. I have more optimism. Oddly, Andrew, because I am a Jew, that I have some optimism still.
I was waiting for you to bring that up.
Shocking.
But what's interesting to me is NVIDIA is putting $100 billion into OpenAI.
Yeah, but
What?
that's like, okay, we're investing in you and you're investing in us, and it's like the same 10 companies. Okay. And so,
But isn't it because we know where this is going,
yeah, well, they think
right?
they know, but everyone thinks they know. Just because they're big
Mm-hmm.
companies doesn't mean that they're all deploying their money in the best way. Right now it's like saying like, oh, there's all this private equity. It has to go into AI or gold or crypto. Those are your three choices. That's like it. That's it. And
Well, you have
so
the Mag 7
yeah, the
is.
Mag 7. And, like I know that there's also a lot of people writing about, oh my God, the concentration of the stock market. It's all like all these companies are generating all the profits. This happens from time to time. I get it. I get it. There will be some survivors. There will be some who lose. I get all these, but in the big picture, for someone who's doing this almost, oh my God, almost 40 years, what I can say is that
What? You don't look a day over 25, Jill.
shut
How is that possible?
You don't look a day over 65. I think that what people who predict, oh, this is the best, and it is something that is transformative. I don't know if it's going to be the hundreds gazillion dollar transformative technology for us, for the world, for businesses, but it's changing. Like there's stuff that's changing, and you understand it. And thank God for, by the way, Andy, it's good news for people like you and me, which is even though we might have a Yiddish cut like a smart person, people who can actually communicate and talk and not be AI replaced actually have some value again. Woo-hoo! That's good.
I don't know what you're talking about, Jim, because I'm not really here right now.
But I mean,
this is my AI avatar.
But you get that, right? Like that there are people who know how to bring these issues to the fore and can really talk about it. And look, as I said, I think that that's the good of the first 9 months. The bad is the self-inflicted wounds that this administration has made for this economy and for this country. In many respects, I would suggest that what we needed was, you may wanted to have changed your immigration policies, but it's good to have people who want to work. It's good for an economy. It's good to have more people paying taxes in this country. That's good for the economy. So
have we seen the net effect of that yet? Like the farms,
you saw, I don't know,
hospitality industry, like I hear they're being decimated because people either have quit.
I think decimated
is hiding.
I think the decimation is probably a strong word. I think what you may have heard that there was a leak by the administration that they were going to help farmers.
Right.
Okay. They did this last time.
In Argentina or
no, just Scott Besson's friends that he wants to help.
Just $20 billion.
Whatevs. I think that that when you see that, when the administration is leaking something like we're going to help the farmers, well, you hurt the farmers. Your policy hurt the farmers. So maybe don't do the policy that hurts the farmers.
He did that in 2016, though, in the first term.
Exactly. And so a lot of the, I think that what we're learning is that, again, a lot of the self-inflicted wounds of the on-again, off-again tariff structure and the inconsistent policies around, how we're viewing workers in this country. And by the way, that bill that was passed, that tax bill, it was promised to be like, oh, it's going to spur investment because people will save taxes. That's not what's going to happen because everyone's tax brackets are everything's staying the same. It's not going to be it's not like the tax law is changing and all of a sudden everyone's going to be like, I make so much more money. That's not going to be the case. The people at the tippy top are going to have a lot more money and they're not going to spend more money. There's only so many private airlines air flights that you can take, Andy. That's it. You can only do like a few at a time, not multiples.
I don't fly on private jets anymore since I've got my spaceship. I bought Jeff Bezos' old rockets.
Yeah.
It's always cheaper to get used. You know that, Jill.
Mm-hmm. Okay. So the good, like bad. Innovation, the bad, administrative policies that have yanked everybody around. I guess the meh is that I cannot tell you how many times I am confronted with people who complain to me about their taxes wherever they are and whatever's going on. And when you drill down with them, I'm like, do you understand how the tax code works? Because I don't think you do. I really don't. And so I am kind of over the people who are like, I just pay so much in taxes. Okay, then don't work. I don't know what to tell you. Like, I'm over the whole thing. Like, tax rates are really low. And if you live in an expensive tax state like New York or California, guess what? You're choosing to live there. If you don't want to live there, go move to Florida with all the dingbats and let your brain melt. Like, don't come back. I'm okay. But can I just do a little like Mamdani moment, which is like the number of people who are like, I'm going to leave New York if Mamdani wins the mayoral race. I'm like, go. I hope the whole real estate market collapses And I hope that young people can afford to buy apartments. This would be great. This would be like, this is called the regeneration. This is the churn we need. So get out of here, fat cats. We'll figure it out. They're not all leaving their businesses. It's such hot air. I can't stand it.
Well, it's like what Trump is saying about Portland. It's a war zone. They don't have stores anymore. Did you know there's no stores in
I'm
Portland?
going to tell you the biggest problem with
And no
Portland
glass.
is,
They're
you know
putting
what
up,
I can't,
they're
I'll tell
putting
you
up
what,
plywood.
I'm going to tell you the worst part about Portland. The air service there stinks. Like you can't, it's hard to get a direct flight to Portland from New York. So to me, I'm like, I'm not going. It's too hard. I got to like take an overnight flight to get home.
You're
Forget
such
it.
a diva.
I
You are
am.
such a diva.
Mhm.
Well, you brought up Mamdani, so I'm going to ask you a question because you did bring up real estate. There is a lot of concern in the real estate community.
Yep.
Is it real?
I don't know.
I don't mean
yes,
is
I mean, the concern
real.
is real.
Is it right? Is it merited?
You tell me. I mean, I have interviewed Kathy Hochul one time, okay? And she's our governor. And I was not about anything. It was not about this. It was about when the High Line did the extension into Penn Station. So it was just kind of like a fun thing. And she was at a ribbon cutting. And so I interviewed her for that. But I mean, a lot of what Mamdani has said reminds me of, when the kid is running for class president and said, you know what? I'm replacing lunch with Snickers bars. And we are going to have 12 free periods. And nobody, if you take AP classes,
Count me in.
you will not have to take the AP exam. So, I think there's a lot of promises. Mayors don't really, mayors, the job of mayor in all these big cities, is obviously even harder now, but it's such a hard job anyway. It's like a technocratic job, which is why Bloomberg was kind of good at it in New York. Like
Get the subways running on time.
yeah, and clean them
lower
up.
crime.
Yeah,
Yeah.
and even like even if the nuisance stuff is still around, but the murder rate is down, so all of that is good. I mean, we'll see if this kid can like surround himself with anyone who knows how to do something. And will there be a problem if a whole bunch of rich people leave the city? There will be. I was saying that like half-heartedly, like go, but it's a problem because they pay a lot of taxes, and so we like that.
Mhm.
But that said, there he is Mamdani, who may be a little anti-Semitic. I don't know. I don't know his heart, but I think he speaks to this real feeling among people who feel like it is very hard to afford to live in a city like New York unless you make a lot of money. And, sometimes people who make a lot of money relative to the rest of the country, like if you think about this, if you have like your son who is making some money, is married, and they make money. But if you could see like two young people in their 20s and their early 30s making 200 grand a year, and those two cannot afford to buy an apartment in New York. They just can't. It's like ridiculous. They're not going to spend, if they can afford $1 million apartment, they can't find the 200 grand down that they'll need or the 100 grand down, and it's just too expensive. So
Right.
there's a problem with a city where costs have gone up by so much. I don't know if this mayor has a real plan, because if you limit how much people can charge for rent, then builders don't build. And it would seem to me that
Right.
that's not a great way to solve the problem. So I think that he says a lot of things that are provocative. I don't think most of those things will have any relevance. I think Kathy Hochul is not going to squander an opportunity to get her outer borough and suburban voters who are probably more conservative on her side. So I don't think there's going to be a lot. It'll be interesting to think, could he do one thing? Like, I hated de Blasio so much, but people tell me like, hey, you know what? That pre-K plan that he did was really good. I mean, I don't have kids, so it was good for them. But I mean, I get it. So a mayor has like kind of like one bite at the apple. What's the thing he's going to do? I don't know. What do you think?
Right. I have a son his age, so I really like the idea that my son could be mayor of New York City if he was Zoran Mamdani. I like that he's energizing young people.
Yeah.
I like that he is a character. I've always said that New York needs a character like Ed Koch, like somebody larger than life. He is certainly that kind of personality. But I agree with you 100%. I think he's inexperienced, and that sort of is what's shaping his either naive or inauthentic view of what he's going to be able to accomplish. I don't see anything getting through the city council. I think the city is more conservative than progressive
Mhm.
for the most part. And I think it's going to be a struggle for him. But like you said, de Blasio had the pre-K, Bloomberg, the beautification program, all the little closures of all the streets and the parks and rejuvenating all of that.
And ruining,
Giuliani,
by the way, one thing about Bloomberg, though, he let a lot of building go on with those long shadows cast into Central Park. Don't love that. Don't love those big
mm.
buildings on Central Park.
But you're right. They get one bite at the apple,
Yeah,
and hopefully he'll have his, and he'll become a member. I hear so much from the business community and the real estate community
yeah.
that they are living in fear of what he might do to a pretty good New York economy.
Well,
And
for them, it's good. That's the thing. That's the short-sightedness. It's not good for you. I get it. It's not good for everybody. And it's
well,
like
that's
saying,
true, and that's at the
right?
heart of his affordability
Yeah.
spiel. Is that New York has become a playground of the rich. It hasn't become a playground of young people getting out of college who are teachers who want to live, in Chelsea.
Right.
Those days are over.
Yeah.
I have kids who had to move out of state because they couldn't afford living in the
Oh,
city.
God, you're so
And
cruel that you didn't support them.
I knew,
Cruelty.
how did
The
I know you were going to
cruelty.
say that?
God, unbelievable. Unbelievable. No, so I think it's going to be interesting to see. All right, so like the good, the bad, the ugly. I think in so much of the world that I cover, which is, the economy and companies, but really people, like what I love the most, or just, what I love doing more than anything else is on my podcast, I talk to real people. And I like to hear what's going on in their lives. And so what I hear so much is this disparate view of what's happening in their own financial lives. Like, you know, it's weird to think that the stock market's zooming higher and have a whole bunch of people call in like, I've got more money than I ever thought I was going to have. And then on the other hand, you get like young people who are like, I cannot figure out how I'm going to be able to buy a house, like ever.
Right,
And what do
right.
I do with that? That to me
Mhm.
is just such a weird place to be. And the inequality between this is very generational, right? Because older people are lucky we just sort of stepped into it at the right time. And I do tend to feel bad for like your kids' age because, we're not smarter than they were. We just got lucky in timing. It's like these idiots who run around and be like, oh, this is the smartest person. And like most Wall Street people who got rich because the trend that was bullish at the time of when they came of age. I mean, yeah, there's some smart folks, but mostly these jerks all just partied and were part of a process. So like us, we're just like a bunch of jerks who happen to buy houses in, the 80s and the 90s. Like we got lucky. I don't remember when you bought
Mhm.
your apartment. I think you had Tribeca
Early
before.
90s.
Yeah, right.
Hmm.
So like we were just lucky. We were lucky. We came
Hmm.
of age at a time like, okay, here's my family, here's my part. I buy this thing.
Hmm.
We weren't smart. We weren't like being canny. We just got lucky. And I think a lot of people mistake that luck or your good fortune for something else. And then they sort of be like, oh, these kids, what are they complaining about? Because they were unlucky and that sucks.
Well, they're locked out of a system that we
Exactly.
weren't. When my first wife, Lisa, and I had our first child, she decided she wanted to stay home. She was a special ed teacher. We could survive on being a one-income family. You can't
Yeah.
do that today.
No.
And even at two incomes, it makes it hard to afford a place that you would need.
Yeah.
And even back then, when we needed a two-bedroom apartment, we had to go to New Jersey for a year.
Oh my
That
God.
that was
Jeez. I
short-lived.
can't even
Short-lived.
believe it.
Came right
I
back.
mean,
But broke a lease. We broke a lease.
It's like Carol King and Jerry Goffin having to move to New Jersey. It's like that
What a
we
reference.
probably wouldn't have had Tapestry if they didn't move back to the city. That is so esoteric and old. I can't even.
That is quite a reference.
Has
I think you
anyone
made the
ever
crux of
talked
it.
about Carol King on your show? Let me ask you something. Are you a Taylor Swift fan?
Of course. Who isn't?
Oh my God, that was so bad. You waited a beat, like so you're not,
Fake.
right?
Fake. You didn't believe it? You didn't buy
So
it?
fake. I mean,
I am.
oh my
It's
God,
been a
look,
cruel
how many
summer,
octaves
baby.
higher did you?
It's a
What did
cruel summer.
your voice just went up 3 octaves? Anyway, I've been
That
listening to
happens when
Taylor.
I talk about Taylor Swift, my idol, my
So
hero.
here's what the problem is when you get
Taylor's
old.
version. I love it all.
I love all
I
of
love
her
it
and
all.
Red in
Yes.
1989. So
Yeah.
the reason why I'm laughing about this is that, and why I have Carole King on the brain is that every time there's like a new person who's like, she's a great songwriter. And I'm like, really? Is it like Carole King and Jerry Goffin?
Don't get me started.
Am I going to be
Okay.
listening to 1989 in 40 years? And maybe they will be.
You're an old fart like me.
Yeah, I know.
Your
Well,
music wasn't as good as our music.
well, slow down and the Beatles, like that's where you are, right? Did you watch the
Beatles.
Billy Joel? Did you watch the Billy
Rolling
Joel
Stones.
special?
I did.
That was
Billy
good,
Joel
right?
documentary was amazing.
That was
Billy
very
Joel's
good.
amazing. Name me a here we go. Name me a singer today that rivals Billy Joel.
Let me just say one thing though.
Or
Did
the
you
Beatles,
like?
or the Rolling Stones, or the Doors, or Jimi Hendrix, or Sly and the Family Stone, and blah, 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 blah.
All right, whatever.
Andy leaves, comes back an hour later. Bruce Springsteen, U2, blah, 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 blah.
Thank God
who do
you
we have
mentioned you
today?
too.
Who do we
but
have today?
Taylor, we have Beyonce. We on our show yesterday, one of the editors of Rolling Stone came on to say like these are the top 100 songs of the first 25 years of the century. And the number one song was a song by Missy Elliott, which is not even my favorite song. But to imagine that all the editors and writers of Rolling Stone came up with like that was the number one song was this Missy Elliott song. I like Missy Elliott. Nothing wrong with Missy Elliott. I like her.
Me too.
But like,
number
wow,
one?
I was shocked.
Well, that's a generational thing.
Did you? But the thing about that, Billy, you might have to edit this whole part out. But the thing about that Billy
I feel
Joel
like
special,
I'm being interviewed by you, and I love it.
but the thing about that Billy Joel
So
special, I
domineering.
definitely, obviously, that I had that I realized there was like a moment where I was like, oh, I'm done with Billy Joel. Like
What?
I did. Well, I appreciate him, but early Billy Joel versus like Uptown Girl Billy Joel.
Oh yeah, there's no.
You know what I'm saying?
Yeah, oh, I know exactly what you're saying. Yeah, no, I'm
Vienna.
talking about like turnstiles and
Yeah.
all that. Yeah.
Okay. What else you got for me?
Last question.
Okay.
We've talked about the stock market a little.
Yes.
I've been an investor for a long time. I follow the
Yes.
markets very closely.
Yes.
I can't help feeling that we are at a bubble right now. That the
Mhm.
market is very overheated.
Mhm.
As I mentioned before, I think it's in denial of so many things.
Mhm.
I think it's like, you know what? We're going to watch CNBC at 4 o'clock today, and they'll say,
No, I'm
stock
not.
market drives. Why does the market drop 500 points a day? And my answer, as I scream at the TV, will be because it doesn't always go up.
Well,
Right? The market
yes.
doesn't always go up.
Yeah,
So
of course.
are we at a point where it's just a matter of time where the bottom drops, or is this a healthy market? We mentioned AI. We mentioned
Yeah,
the
we'll
Mag
see.
7.
Can I tell
Is
you
there a
what
lot
my
going on? That's great. A corporate earnings great, or all the underlying
yeah, companies are making
fundamentals great.
companies are making a lot of money.
Okay.
On the JillOnMoney.com website, shameless plug, the blog post I put up today, markets
Mhm.
peak, time to get in or out. But you know what? The thing is, I never, people don't ask me about investments unless we're close to the top or the bottom, usually, right? I just don't know how long stuff's going to go on for. There's an old trading saying that's sort of like, like even if you're right about the trend, like God, there's a bubble and it's going to drop. Of course, it's going to drop at some point. I just don't know when, and then I won't know when to get back in. I don't know when to get in and when to get out. That's the problem with trying to time the market.
Who's that famous short? He would say for years, the market's going to crash. And he was eventually right.
Yes.
But I always said, like, how much money did this guy leave on the table?
Yeah.
When everybody was making a fortune.
Yeah, you're going to go short. You're going to be short, and like you're not going to end up being like able to be liquid. Like, look, the problem is that I don't know. I really don't know. I know that when everybody is like piling into gold and piling into Bitcoin and worried about this and worried about that, like all of these things are signs that things are getting frothy. It doesn't mean that the market's going to crash. It could mean that there's a correction. Like I think that people were really shocked earlier this year when stocks were down almost 20%. That's a bear market. We went down dramatically. Yeah. And you know what? That's going to happen again. I don't know when. I'm useless to you. But what I can tell you is that, over time, if you stick to a rational way of approaching investing, which is some money in stocks and bonds, and you want to have a little crypto in your drawer, that's fine with me. You want to have a little commodity position, that's fine with me. All of these things, it's fine. But the real issue is how much money can you save? And can you get that money to work? And can you just stay the course? You don't have to pick the top or the bottom. You know what Albie Schlesinger said? That was my dad. He would say that no one rings a bell at the top or the bottom. So you just have to keep going. You just have to keep going, and you have to just like you hate the times when the market sells off, and you're like, oh, this feels terrible, but the money's going in my 401k anyway. And
That's right.
for the people who keep asking me, like, I have a friend at work who's like, I don't just don't want to sell my Apple because I don't want to pay the capital gains. I'm like, okay, don't, fine. But when the market goes down and you're sucking wind, do not call me. Like, don't
Right.
like these things happen. So you should never let a tax loss like be like, oh, I can't sell this because I'll pay taxes. That's a good signal, dum dum.
Yeah.
Like you made
Especially when it's
money.
long term.
Yeah,
Yeah.
you made money. Relax. Anyway,
You're
so
going to pay 20% on that on a long
even
term
if
buck,
you have
right?
to, if you 23.8 is the top, but and New York is going to pile on. And so let's say that you made 100 grand over some period of time and you paid 30 grand in taxes and you kept 70. Can we concentrate on the fact that you made 70 and you stop like bemoaning the fact that you paid taxes? Otherwise, you'll never sell anything. And
Right.
then what's the point of this? Like
But
sell
then
it,
there's that
enjoy
little
it.
old lady who still has her first Apple shares.
Yeah, I mean, good for her. I want to sell some and enjoy my life.
All right. So if
Yes.
you came into $50,000, your Aunt Harriet died, gave you
Yes.
$50,000. You're not a real investor in the stock market.
Yep.
You're not a kid. You're not an old person.
hmm
Would you be jumping into this market today?
So I got a little, let me go wonk on you. Charles Schwab did a great study about this, which is the title of the study was called Does Market Timing Work? And what they did was they looked for 20-year chunks, 20-year periods. And they said, okay, let me look at, they said, let's look at like the different approaches to investing. So you had a lump sum, which was like, you could put $2,000 a year and you would always pick the low point of the year, a consistent investor who invested on the first trading day of the year, a monthly investor, a bad timer, and then the procrastinator who left their money in cash waiting for the market to fall. And the long story short is that essentially the most important thing to do is not to wait for the bottom. Like you cannot do that because you will not figure out where the bottom is. Most people invest at the bottom by accident. Okay. So the quote that really stood out to me, which I happen to have up on my screen, is it's nearly impossible to accurately identify market bottoms on a regular basis. Ergo, what should you do? You have 50 grand. You're so scared. You don't want to be the schlub who puts 50 grand in and then the market collapses the next day. Okay, so dollar cost average, put 10 grand a month in for 5 months and get the money invested. And whatever it is, like that's a very simple way to do it. And don't try to figure out the top or the bottom or this or that. Just get the money to work. And again, if this is long-term money, if you're 30 years old and your great aunt Harriet died and left you 50 grand, you don't care what happens tomorrow. But you know what? If it's just going to bug you, then put a little bit of work, but get your money to work. Get investing.
Great advice as always, Jill. Appreciate it. Come back again soon.
Thanks for having me.
All righty. Take care.
Okay.